The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 8th day of July, and my pleasure to be here. And we're looking at a whopping move in the Dow. It's up 182 on the perception that the job news is good, and at 18,077, it's broken out of all those resistance levels we've been looking at. The S&P is up 24 at 2122. Excellent move, started leg D in the weekly chart. That is great. You've got the comp index up 64 at 4,941. The VIX index is down to 1361. In the 13s, that invokes buying pressure. That's all it is. The E-mini is up 23 at 2116. 2119.50 will be the previous high that it needs to break right there on the 24th. 2119.50, and we're at 2115.50. Oh, it's possible. Leg D in the E-mini starts at 2119.75. Possible. We'll see. And leg D in the 120-minute chart, that's the pattern that I showed my subscribers this morning. Let me just show you what I was looking at. A couple of things. Here we go. I'm going to go to this chart right there. Okay, that's what I showed my subscribers every day. Early morning, I started off with the Dow chart. I'll go into that in a moment, but we're talking about the E-mini. So this is what I showed, that there was this downtrend line that was very important to break. The market was up 5 at about, when I sent it out, about 7:30 this morning. And we're still looking at a big move to the upside that needed to be made for the weekly chart to break to the exceed. This is the 120-minute chart. And I had a left side, right side price time match, which should take it to right there to the 2104.70, to the 2102.25 level to get a leg D. What happened? We went to right there, left side, right side price time match, and we went, bam, right into the, it was 2 bars early, and it went right through that, and we were in leg D. And look at the MACD and stochastic in the 120-minute chart, very strong. Now, let me just make this a little bit smaller. Ooh, I got the right thing, and we'll move along. Within the context, the IBM, remember, was lagging, and the IBM right now, nice move. It broke that tremendous resistance line, hit 3 times, and boom, 4th time, up and out. And the weekly chart still needs a lot to go before it can get to the 118.65 level, which will start leg D. But it's improving that monthly chart finally. You've got the QQQ series, the Qs right now, leg B up. That's a nice move. And there's a left side, right side price time match, which says by the 18th of July. Am I right? No, by the 15th of July, there should be a test of the 110.75 level. That's less than a point away. And we've got a resistance now still in the weekly chart as this asymmetrical symmetrical triangle is about to test the resistance level. So that's good. And the Q's weekly chart, monthly chart is okay. It's holding the 9-period moving average. It really actually isn't a leader at this particular point. Okay, let's go to gold. My contention has been that there's probably going to be a pullback I thought there'd be a pullback in the interest-sensitive area. Excuse me. Why is that failing? At US should be right there. There it is. As the interest rates and dividend-type stocks come under some pressure because they've had such a big move to the upside, while you've got other sectors that have come alive. And that's exactly, I think, what's happening here. No, I shouldn't say it's exactly. It's happening in a way. But the gold stocks actually are holding up pretty well. I'd say not shorting, just a pullback. That's all I'm thinking of. So the dollar, so the U.S., this is the U.S. Treasury bond at, this is trading at 176 and 17/32. Leg D in the daily finally got, you remember that FC, and I said it's holding well. I think we're still going to make a D. We just got to the D. The MACD and the stochastic are still very strong. I just see only a mild pullback. I still think the Japanization of our bond yields is unfolding. Huge leg D in the weekly chart. And look at this monthly chart. Oh, man. Look at that. Going towards the upper end. It's getting real close to the resistance. All right. This is a 31-year up channel. Can you believe that? A 31-year up channel. All right. We've got to look at crude oil. Crude oil, I think, is going to go down a little bit more. Not a big deal. Just it needs a breather. And a spectacular move from the 32 level to the 52. And now it's at 44. Let's call it, yeah, the 44s. And maybe it goes out a little bit more. That's the way the weekly chart looks. And I did finally put a down arrow. So this says the crude oil is in a sell signal. Technically, the MACD needs to cross negative before it's a sell mode, but I do have to put a down arrow because it's closing sharply below the 9-period moving average, and the stochastic's at 71%. But I think more than thinking it's a sell mode, that it goes much, much further. I think it's going to find some support in the 40, 43-ish area, maybe 42. Not a big deal. Okay. I'm missing the dollar. The dollar is holding well. It's at up 6 cents at 96.39. Kind of a double top here. If it breaks above next week, if it goes above 96.71, it's really, if the dollar gets to the 97.50s, that monthly chart, the U pattern that we've been talking about. Remember, I'm all about patterns. This U-shaped pattern looks like you're at the beach, right? That U-shaped pattern is exactly what we'd be looking for. Why? Because that produces another wave to the upside potential to try to tackle a leg D above 100.51. But if there's a failure and the dollar starts to go to the 94.50 area or lower next week, that says, oh, failure pattern. Forget, nothing to see here, folks. Okay, let's go on to the VIX index as we're about to go to a break within another couple of moments. We've got, oh, I didn't see that. I'm not sure if Vic is still holding. I'll just ask my engineer. Al, is Vic still holding? Because I'll get him straight after the break. I'm sorry, I didn't realize I didn't get a yes or a no. So we're looking at, what am I doing here? Oh, the VIX index, VIX.X. VIX is down at 1366. There's that A pattern. You remember I spoke about it? I wanted to put it in right there. And it says, be careful, because if the VIX starts to hold in the 14s and the 13s, low 14s, 13s, and then gets to the 12s, there could be quite a move to the upside. Okay, I think that we're about to look at the 10-minute chart. I said to my subscribers that there's a left side, right side price time match here. It was sent when we were over there, and that it gave 830 to 840 as leg D to start at 2102 or higher. A time left side, right side price time match. Obviously, we spiked through that. Because of this move, I can't just call this a peak F coming up if there's a lower high bar. I have to think that it's an alternate count F/B. People are just being forced. It was so quick. I don't see how people, I'm sure that some people are only starting to think of covering now because they kept waiting for a pullback from Dow up 183. And this is a Chapman wave cup and ladle. It's a fabulous pattern. I'll talk about it when we get back, if I remember. I'll be back straight after these messages. Basil Chapman, and this is the Tiger Technicians Hour. I'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Just before I forget, Dan Zitow, who just shows his trades and beautiful trades, this guy is talking about beans. I wanted to show this beautiful left side, right side price time match. It's actually 1 bar early, but to the low that was made of on the 24th of May. This is the continuous soybean continuous contract, November contract, and it had a low of 115 and a quarter, and I took it all the way to the left side. So what I like to do sometimes, to the high, the fulcrum high of the peak F top that was made right there at on the 10th of June at 118 and a quarter. And what's really important about this is, look, it came down with the Chapman Wave inside wedge support level, boom, 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 kept hitting it, and then it finally stopped this morning at 1021. So 1021 is above the 1015 level. So this allows for a bounce. At this point, I just have to consider it only a bounce. Why? Because the MACD and stochastic are still not all that good in the daily. But the weekly chart, stochastic and MACD, have turned down, but are still in the area where it allows for a bounce. And the 120-minute chart has had a very nice move up. And my left side, right side price time match says that by Monday morning, if the rally continues, then 1062 and a quarter, 1062 and a half would be the price match, and it should be there by late afternoon on Monday. Just looking at it this way, okay. So I just wanted to get that out. Let's go to the chart I was looking at. Remember this 10-minute chart? And I spent a lot of time. Anyone, actually, it would be a great lesson, especially for those of you, for subscribers who study the Chapman Wave and have got my CD introducing the Chapman Wave methodology, who have studied it with me in private in our Master Trader series. You'll know that I talk about a pattern that I call the Chapman Wave Cup and Ladle, but I also wanted to mention that the shows that I did with Tommy O'Brien Jr., when I was sitting in for Tom all this week, he asked some really good questions, and I was able to get into them in more depth. It was really nice to do that in a way that I don't often either get a chance or take the chance. So what I wanted to say is that if you want to listen to some of the archives, I've been going through it with the 10-minute chart and talking about all these patterns. The pattern I forgot to talk about this morning was the 1-to-1 pattern. Yeah, it doesn't matter. In the meantime, the Chapman wave cup and ladle says that you don't make a handle, the traditional pattern that you talk about, especially Investors Business Daily makes a big deal out of the handle, cup and handle. This is different. What happens is it soars right through to leg D or C, but it goes above the left side lip, in this case 2102, and it usually does it. There could be a match of the left side and the right side, but most importantly, there is a cup formation that powers through the left side lip, and that says you're going to go to a leg D at least. From peak D, you could come back and test the lip. Well, the lip was 2102, and today we pulled back, and then it went to 2103.50. That's pretty close. And now it's starting to move up. So what I would do if I was looking at this and saying, okay, where are we? Is this an F? Is this a B? I'm long and I don't know what to do. Should I take something off? Should I hold it? I don't want to be greedy, but at the same time, I want to trade the pattern, etc. I'd be looking at it and I say, okay, for my type of technique, what you really want to do is, well, first of all, I'm able to grab, I don't often do this, but I do it when I remember to do it, is my Chapman wave projections Chapman wave projections of resistance and support right here. Let me get rid of that one there. Okay. This one here. And that says at 2117.50, there should be some resistance, 2117.25, 2117.50. There should be some kind of resistance. So you see the technicals are just about to pull back. So I'd look at that. Why would I want to use the technicals? Because I want to see what's happening, but I also want to see where the resistance is. But it's been steadily piercing the resistance after a bar or two in that 10-minute chart. The 2-minute chart. So then what I would do is this. I'm going to grab this one, I think it is. Yeah, this is the 30-minute, which is in leg also alternate count F/B. But I would want to put in I'm going to change this now. I'm not going to mess up the notation. I am right. Okay, I'm going to get rid of the notation. Let me show you something. I don't have R. No, I won't get rid of that. I just want text. Get rid of text. Gone. Okay. So what I would do is I would go and I'd add my MACD and my stochastic, and I say, wait, I need help. I've been working for quite a while now to do the naked charts to see if I'm able to assess within my own techniques of waveform patterns without anything. I like to look at the naked chart. I even like to even trade the naked chart because it's going to allow me to develop and refine, because I know the MACD and stochastic so well. At back of my mind, they're there. I'm pretty much sure that I know what's going to be going on. But at the same time, it's always good to look at the real thing. So I've added it now. I'm going to add the stochastic. And if the stochastic is holding the 90% or higher level, I'm going to say, gee, pullback should be very modest. And there's just going to be a little bit more buying pressure for a little while longer. So here we are, slow stochastic, right there, added it, ping. And where is it? It's at 96%. And it's flattening out. So far, I have every reason to say, maybe we can call that an F, remember, with the notation. But it's saying, oh, I shouldn't have taken it off, should I have? Well, it's too late. So in the meantime, back at the ranch, where are we? We're in this area. I'm going to do it from here. That was the A, remember? So I'm going to go peak A, peak B. Oh, sorry, peak A. I can't remember where. Let me start again. A, B, C, D, E, F. A, B, C. And then you got that powerful move to the upside, D. And now is this E to F. That would be the natural inclination to say, wait a minute, the MACD is still very good. I could just keep counting EF, and the stochastic's at 96%. Then I would say for safety, I want to put in the alternate count A/E and F/B. I just want to be ready. But at this particular point, Dow's up 192, S&P's up 26, and the E-mini is up 25. I want to just keep this as something that if one was long, you stay long. Or you take off right now. You can say, you know what? I've had such a good move. I'm taking off at least part of the position if I have more than one. and I'm going to hold the other. And I'm going to put a stop on the other because it's just been so good to me. I'm going to put a stop. If there's a pullback, there's the doji candle, below the doji candle of 21.1625. That's just too much, $1.50. I don't want it so tight because I've already taken profits on one. I'm going to take it on the last trough that's of importance. So 21.12.50 is the stop on maybe the other position. And I would raise that stop 0.1 to 1. So if this is at 21.17.50 and goes to 21.18.50, I'm going to raise the stop 1 point. I'm prepared to be taken out because it's been such a good move. And then if you close at the high of the day, what would I do? I'd have to say, you know what, over the weekend, anything can happen. We could gap up on Monday. But in the meantime, a huge profit is a huge profit. I'm out. I'm done. I'm going to rest and relax over the weekend. That's the best way to do these things. Now, if you're in a longer term position, then don't do anything. Just stay in. So I'm going to just say once again that we're looking at very strong action. And what's really important in my work, we're going to look at the New York Stock Exchange as soon as I get back. That, remember I wrote it in? Where is it now? I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We've got a pattern we're looking at here in the New York Stock Exchange. And you remember, I'm going to get this chart up here for a second again, where I said, Actually, before I even do that, I just have to say that I've really enjoyed being with Tommy Jr. all week. I think he did a fabulous job. It's just not easy. You got to get the timing right. You got to get the right questions. You got to know where to go. You got to know not to be boring. You got to know how to focus on something specific and then move away from it, because you get that feeling that the eyes are glazing over of the listeners, or the ears are glazing over. So I commend you. Tommy, I think it's great work. You've really. You were a wonderful host, and I appreciate that. Thank you very much. Okay, now let's go to the New York Stock Exchange. This is the monthly chart, and the high that was made back in 2000 in September. This is number one. Pullback, and there was a decline to a peak B, and then a sharp leg A up, which failed, and it just tumbled after that. Went to a trough F that was in March of 2003. Went to 44.18. So it starts a brand new move up. See the way the MACD, see the stochastic is up there, mostly above 80%. And you see that the MACD, mostly the green line is above the red line. The slow moving average is holding steady, and the fast moving average just touches it and goes up. Well, you run up into the October 2007 high of 10,387. And then you pull back to a trough B, the second trough. Leg A goes to an A minus because it fails that H pattern, breaks the left side low and starts a tumble that goes all the way down to the March of 2009 low, 41.81, a little higher than the previous, a little lower than the previous one, 44.18, 41, right, lower than the previous. I must type those in. And then it starts a brand new buy mode. It goes peak ABC, the previous one went ABCD, plop. ABCD again, ABCD, instant restart, another quick ABCD, and number 3 is the May high of 11,254, and you go down to trough B, and you squeak up, and you go to an A, but that A pulls back just to the red line, and then it goes right back and makes a B, a leg B, and we're in leg B in the monthly chart. I'm going to show you something that's very interesting. What I said is, I like what's going on here, and that's why I said, uh-oh, with a question mark. It's still not out of the woods. But the MACD has held beautifully, and the 0% line is only at minus 34. Look what happened over there when you got the uh-oh. It was terrible. This has used up time, but not price. I love that. And when you're looking at this is the 67.84 level in the stochastic, that's really quite good. Not good enough, but it's good. It's higher than it was when that bounce over there that was in 2012, early in 2012. So I like what's going on. And these vertical lines show you what I'm comparing. And so far, this is superior action to that action right there and right there. Okay, so that's that. And now I want to go to the actual chart. This is the NYA. Look at the way the 9-period moving average of 10,347 has been fantastic support. Now the NYA, the New York Stock Exchange, very broad New York Stock Exchange, up at 128. You know, we've got Route 128 here in the Boston area. That's the circumference all around the greater Boston area from coast to coast. And when we look on the coast, one side of the coast to the south side to the north side, not coast to coast, east coast to west coast. So look at this. You've got a cup formation, and now you've got a larger cup, a deeper cup formation. I did a lot of study over the years. I have all these different patterns. I've got a book of patterns. I haven't even looked at it lately because I'm going to do a whole refresher at some point over the next couple of months. But what's really important about it is that the work I did said that the left side inverted, a reversed handle and cup instead of a cup and handle, but a handle and cup, says that when you break from the low back up again, you have to take out any peak of importance on the left, the lip of the left, in this case 10,648. And this is a new leg B. It's a gray leg B because it's underneath. I should keep it gray. I don't want to. I'm going to keep it blue for now because I think that this has to have an up arrow because of the technicals. The stochastic is 73% and the MACD good. I think we are going to go high even if we have a sudden pullback next week. But what's really important about this is that the weekly already made a peak E. But I couldn't put a down arrow because there was just one bar negative and the next bar was hugely positive. So that says it's a plus sign and that I should go to another peak coming up, and that peak could have a pretty deep correction as well. Just got to be somewhat careful. So far the New York Stock Exchange is giving really good action. I like it. Okay, just wanted to go through that. I thought it was very important. Most importantly that we're looking at right now is that the 10-minute chart. Where can I go to the 10-minute? There it is. This is the first little pullback we have that says, okay, going into the lunchtime period between 11:30 and 12:30, that's where you could get a bit of a pullback. So now, if somebody was asking me about the Natix platform, what would I do? I'd say I'd have a trade going to 1 o'clock, as long as I could follow it, and I could have an intra period exit point. In other words, it's not closed at 1. You can't do anything until 1. But if I could close it at any point, this is the period where, for the first time, I'd say, okay, maybe now you could have a bit of a pullback from 21.17 in the E-mini to something like 21.14-ish. This is now the gray area is really the support area, and that would take you to the high of that candle, 21.1375. So this is where we could have a bit of a pullback. And if there was a trade, I'd say, okay, I'd have a trade. Either it would have a time limit of 4 o'clock, or it would have a time limit of 1 o'clock, maybe 2 o'clock. I'd give it a little time. But if I had my druthers, I'd say, you know what? I don't want to. There are too many people here that have missed completely going long. And there are still too many people that are absolutely short. You know they have to be short, because if they didn't get out earlier, they were waiting for the pullback. And that pullback has that next surge. This is the most difficult decision. So I think the pullback might come. It could even come towards the end of the day when everything's done and everybody's given up and said, okay, I do have to go long. All of a sudden you get that rug pull going into the weekend, because who knows what could happen in the weekend. I think we've already done this. Breakout of the Chapman Wave cup and ladle to the pullback, and was a successful pullback. Okay, so what I said is I want you to look at it in terms of the 10-minute chart. So if I can go back and see where the 10-minute chart is. This is the 10-minute? Yeah. So here's the 10-minute chart, and I'm looking at it, I'm saying stochastics at 94%. What I normally do is when I'm looking at something like this and I want to make a decision, I have no choice but to go to either a 2-minute or a 5-minute chart. So I'm going to go to the 2-minute chart and I'm going to say, aha, 211.1750 was the resistance. It went a little higher. It went to 218.75, a point higher. Now it's saying 215.95 is support. Let's see how that support holds. But the technicals, what I thought I mentioned at the time, was as it was getting there, you suddenly saw a little bit of a negative divergence in the technicals. It took another little pop to the upside before you got it. So this is the first time I could say, now you could get your 3 to 4 point pullback, maybe even a 5 point pullback. 3 to 4 point pullback, and then we'll see what happens. All right. So I thought I'd cover a bunch of things. I've covered the New York Stock Exchange. I've shown you the chart pattern in the monthly. You can see why in the monthly chart that when I show you this chart, look, it doesn't look like anything's happening here, but that's because it's a huge 1996 it takes you from. So you don't get the perspective, but you do get the perspective right there. I'll be right back. Basil Chapman, Tiger Technicians Hour, and I'd love to hear from you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So we're looking at the SPY and the USO contract. Wait a minute. Is that SPY? SPY. Let me just double. Oops, there it is. Oh, that's the SPY. The SPY contract, which is moving up sharply, it's at 212.10. And the USO, which had pulled back dramatically and ignored the fact that the SPY had gone higher. Let me just put him in the Chapman wave notation right here. A, B, C, D, E. All right, yeah, so we can have a bit of a pullback right now. Lunchtime, a little quiet time. People will shake their heads and say, what do you think's happening here in the market? So I'm looking at this and I'm saying, all right. So oil actually was dragged up because of the SPY, which is at 212.10, and the USO is trading at, what, 10.85, I think, up 3 cents. So this is going to be very interesting because the SPY should technically have dragged the market down because that's, the USO, the oil contract down sharply, normally would be dragging the market down. It isn't. Okay. So there was a question, I didn't see it. There was a questioner, someone who called in, Vic from Tampa, wanted to know about Eagle, E-G-L-E. I hope he can call back. I'm just going to do it right now, E-G-L-E. You see, this is one of those shippers, and I think that the shippers have a real problem. I don't understand quite why. My guess is that there's just such an abundance of oil and maybe even the grains, because some of the grains have pulled back dramatically, that the dry shippers at least. So this is must be a dry shipper. This is Eagle bulk shipping, and it's trading at 0.37. So Vic, I would say to you, if you want just to take a gamble as if it was an option, the way I see it right now, it could be basing a little bit right now. This is just for Vic. This is not for anybody else, because this is you could lose everything at 0.37. You say, oh, only 0.37. I'm going to buy 10,000. Well, you know what? That could cost you a lot of money. Just gone on a percentage basis on a win-lose situation. But at 0.37, if you're saying I'm treating it like an option, unless it goes broke, it's always going to be around somewhere. It could be at 0.01. But at 0.37, I'm going to say to you, you've obviously been looking at this. I'm going to say, yes, you could have a little bit of a position. I don't get carried. You're not going to retire on this. So rather just treat it as one of the positions you have. And if it can give you a double, that's fantastic. But I wouldn't get carried away. Not only that, if you look at dries, which is dry ships, that's showing nothing at 0.44. You're talking about a stock that was at 450. You're looking at a stock that was once in the 120s. Something's wrong, very wrong. All right, so that's dries trading at 0.44. But wait a minute, if you look at DSX, what the heck is DSX? I always remember the symbol. Diana Shipping. Now there's something at 2.63. That's showing a bit of life. Whatever they're doing is way better than the others. So you're not paying 37 cents. You're paying almost 8 times more. You're paying $2.63. But here, I'd be comfortable saying to you, if you're interested in this area, in this sector, at 2.63, you could have a small position, and let's see what happens. It's a cup formation. If it can get to 280 by a week today, without trying to even touch the 230 support level, 250 support level, that'll be fabulous action. That's the way I would do it. I would not get carried away. Good Fletch and Zen says, overlay a chart of the EU banks with the shippers and you'll see what's going on. Oh, absolutely. There's no question about it. But this is one that has the arch formation in the Chapman wave technique of that H pattern, lowercase h pattern. Very successful test of the last low. And I'm going to do this right here. This is the low that I have to go to, not the one that I just circled. Right there. Okay, so that's a little different. There's some substance here. If you want to be in the area, that's the only risk I take. At 261, I would still have a stop of 230. He goes under 230, and it's going nowhere. It has to move from today. This has to be a breakout start. So it goes to a leg B. That could be a leg 211. 211. So this is A, B. You want leg C to start at 245. Sorry, 273. At 273, that'll be real nice action. So that's the one, okay? I'm going to put it in my notebook here. That's the one I will follow. DSX is a little bit better at 261. All right, if you want to be in the area. Not a great area. You don't want one stock out of the whole group to be leading. It doesn't work that way. So I had a question from your voice. You don't seem to be bearish about oil. No. Don't get me wrong. The monthly chart is still horrible on oil. And the weekly chart is kind of declining. And I have much lower prices. I have a target of oil with major dislocation in the oil-producing countries. Major dislocation. That's what I'm looking at over a period of time. But right now, I'm just saying, it's still after a massive move down. This is still residual strength that we're looking at. So I am bearish in oil, but I don't see it. I don't know if this peak D that was just made at 52 is really the top. I think there's going to be more choppy action to the side. And at some point, I think it breaks down. And that's when the XAL, good point. Yeah, that's when the XAL, nice move first time. Nice move. Oh, I had a couple of questions coming in here. Yes, now the XAL is looking much better. And those airline stocks, I'm prepared to say, yes, if you want to nibble at Delta, maybe Delta? Yeah, Delta's in leg B. Goldman Sachs had a question about that. Leg B coming up. Yep, it just made a leg B. Now you can do a little nibbling. Don't get carried away. Just don't get carried away because the bank sector has not been the favorite sector at all. But there are low price stocks all over the show that are doing very well. So I don't want to be distracted here. Yes, I'll show the pattern again. You see this arch formation? If you look at DSX, look at the pattern, arch formation. They're all over the show in different sectors. It's quite amazing. What was the other stock? Oh, am I going to forget now? We looked at it the other day. Oh, it was Goldman. I just did Goldman, of course. There was another stock I looked at that had made the arch formation, had a successful test, could have a balance. Oh, IBB. So the IBB is up. Now it's up 236 at 270. Leg B, nice leg B. And it's just on its way from the low 240s up to about the 278, 283 area. And then maybe it starts back down again. It makes the U pattern, the lowercase h that goes to a lowercase m pattern. All right. Oh, that's what I wanted to look at. Now let's look at this chart here. Oh, I didn't finish that. That's what I wanted to do with the stochastic and the MACD. Why is it not showing? Click. There it is. So this is that's without. That's the naked chart. I want the one that has a whoops. There goes that buzzer again. Off. you think this weekend I'll remember to do some work on that silly old clock? Ah, there it is. So what I'd said is, I'm calling this F/B, and the MACD is still holding real well on the 10-minute E-mini chart, and the stochastics at 92%. The MACD's just turned down. Price hasn't shown that it's got any weakness, but this is the area coming up that says, from here, watch closely what's going to happen. And we'll see. And in fact, what I'd like to do is to move this to another chart. Okay, that's great. I'll be right back. Basil Chapman, Dow's up 198, S&P's up 26. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Real quick now, I was asked if I would look at GPL, which is Great Panther. Great Panther, let me get out of that. Whoops. Okay. Great Panther is going to peak A, B, C, D, and it's pulling back sharply in that Eiffel Tower. It's at 152. I'd be a little careful here. My eye says that the weekly chart is going to test 142 to 138. What was the low there? 133 to at least 138. If it takes out 138, that 133 says lower lows and lower highs, be real careful. I think it's had most of its move for now. It just needs time. Huge move in the monthly chart. So be careful. It's trading at 152 GPL. So I need to go back to a couple of things here that I wanted to just cover in this final segment. HGX. Oh, wrong thing. Good grief. Type it in the right place. HGX. Oh, nice move. HGX is the Philadelphia housing. Oh, of course. HGX. That's a great move, and I was going to show it in a weekly chart, but this is good. Monthly chart has really improved. Yeah, home builders are really, now they're on fire. Finally, the trough C was made underneath 220. It's trading at 244 right now. This is leg B, a new leg B to the upside. Yes, absolutely good eye. And that was Bob. Yes, nice. And I just wanted to show this for 1 second here. There it is. This is the wood chart, made a peak D. It's struggling to rally, but finally you've got your leg D. Oh man, we've been waiting for this for ages. In the weekly chart of the HGX, the Philadelphia Housing Sector Index, what I really wanted to show was this. You've got a move down to a low this week of 2.106. 2.1%. That's amazing in the 30-year weekly. I'll show this to subscribers and I'll discuss it. 13.36 in the 10-year, and you've got the low of 9.11 in the 5-year. So you remember that I said Elliott wave 1, 2, 3, 4. This is 5. Now you can expect something else to happen, and that might coincide with some selling as money comes out of bonds for a while and goes into stocks. Wouldn't that be interesting? So I hope I covered that. Yeah, I did cover the Goldman Sachs. We'll do JP Morgan, and then I just want to wrap up for the week here. JP Morgan did make a leg 62.19, 62.17. It needs 3 more cents, and it starts leg B. You know, these are not the best stocks, but I think they're attractive right now as a trade. I wouldn't get too carried away. And then a question about London. I'm just going to do this. This is GBDOW. This is the Dow Great Britain chart of the index. Yeah, it's acting so beautifully, so way above where Brexit occurred. And if it can go above the high of the 4th of July, that starts leg C. This is a good action, but don't be surprised if we have a bit of a pullback. This is a huge move to the upside. Some rallying maybe into Monday morning and then a little bit of a pullback. So yes, as we wrap up now, thank you for the week, and thank you to Tommy. And as I say to anyone listening, there were some real great lessons that we both went through, some exercises in design and patterns and things like that during the week in the 10 o'clock to 11 o'clock hour. If you can reprise it, I think you might find it quite valuable. In the meantime, the Dow is really strong. This is a strong leg B to the upside. We've broken out. The weekly chart is at 18,099. It's just 70 points away from starting leg D. That should start by Monday or Tuesday. I like it. And that weekly chart, monthly chart says a break into leg C should take you above leg G of 18,351, the high of May. And keep in mind, as long as the VIX index remains low like this, it is buying pressure. Wow, it's even gone lower. It's at 1360. So with that said, I hope everyone has a great weekend. I didn't do any politics today. I just didn't feel totally comfortable at all, other than to say, think of the email situation as too big to fail. Hillary Clinton, that's what happened right there. Just like the banks, too big to fail. I thought I'd throw that in. Just interesting, huh? Let's see what happens next week. Have a wonderful weekend. Don't forget, subscribers, a lot of charts coming up this week.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.